Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment market so you can better your portfolio. We continue to see improvements in some of the indicators throughout China this morning. In fact, we're looking at obviously the Greek situation starting to come to an end. Their government basically unanimously approved sanctions basically on austerity measures there and budget constraints, which is actually a very, very big positive. We're finally seeing a lot of the adults enter the room throughout some of the economies outside the U.S. Hopefully one of these days we get some of the adults enter the room with our U.S. government, and I think ultimately in the next 3 to 5 years we can have a much more robust growth in the U.S. economy. We continue to be invested in the small and mid cap within the U.S. We are currently out of large cap. Small and mid cap, based upon our global tactical opportunity portfolio, continues to outperform this year, along with our emerging market exposure. In fact, our global tactical opportunity portfolio again is outperforming not only the markets, the S&P, but we continue to see good strength within our strategy. And on the income side, we continue to favor emerging market debt, and we continue to look at high-grade corporates and also high-yield bonds on the income side. I think today, more important than ever, investors need to realize adjustments when necessary based upon your investment strategy need to be made. I'll tell you a quick interesting story. I had a talk with a gentleman, a non-client. This goes back about 2 weeks ago, and we were just kind of discussing a few things within his portfolio, and he was kind of self-managing some of it, and then he also had a couple brokers / advisors that he thought were helping him with the rest. He wasn't really overall ecstatic with his portfolio, and he said the problem that he says really lies in with me. He says, because since I'm managing some of it, he says I can buy things, but I don't know when to sell them. So he said, often I'll buy a stock or a mutual fund and I don't know really when to sell it. So often I ride it up and I ride it down without a clear, decisive action or strategy. And he said the reason I came in is because you talk often on your radio show about an investment strategy and following it. And I think every investor should understand whether it's a client or a non-client. Obviously, Resney Wealth Management follows a disciplined, detailed investment strategy, which includes risk management. If you don't follow that strategy, it's like trying to go to Disney World or anywhere else with a map, but not following the map. You're not going to get there. Or baking a cake, as I've talked before. So really, it's that strategy. And part of that strategy is when do you sell? The problem that I think the crux of most investors today is really not having a decisive reason when they're going to sell. And then the emotions kind of are the pivotal point. And unfortunately, often those emotion side will wreak havoc on the portfolio. So you do really need to follow your strategy, regardless if it's temporarily not working, and that's really important. As we continue to go through the rest of this year, I continue to see improvements in the U.S. economy. Things are getting slowly better. And what I'm starting to see, and I think what we'll probably see by year end, there's a lot of pent-up demand within the U.S. consumer. The last 3 years, and a lot of research that we have done personally and studies that we have read over the last 6 to 12 months, we're starting to hear more and more consumers say, you know what, I haven't done a lot in the last 3 years. I've kind of held back on my spending, and I need to start doing some of the things that we've been waiting to do. So I think ultimately, there's a real good chance that we could actually have slightly positive, upward, more second half of the year revisions to the GDP numbers, because I think pent-up demand is definitely here in the U.S. Now, on the emerging market side, which again I do favor, has been doing exceptionally well again this year. China, which we own positions in China and in Brazil, are our two main focuses on the emerging market economies. Both of their economies continue to improve and both continue to do well. Data sets coming out of both of those areas are improving, along with the U.S. Now, what I will tell you is, in general, it's going to take the U.S. a longer time to come out of its slump simply because of the debt situation we're in, consumers paying off debt, and even though things are getting better, it's a slower recovery than normal. So again, making those changes, being into relatively stronger sectors is going to be more important than ever. Obviously, our strategy focuses more on relative strength investing and well diversified throughout the world in all sectors when appropriate. Only include assets that are truly moving in the right direction on a relative strength ranking, and part of your portfolio management obviously always needs to be risk management, because if you don't have risk management, you may ride things down quite a bit in the next downturn if we have another recession. And remember, recessions come around about every 6 to 7 years on average. They could be more often, they could be less often, but at the end of the day, recessions do have an impact on portfolios and portfolio returns. This is Brian Resney. Of course, if you're a client, give us a call if you have any questions about your portfolio. If you're a non-client, call our office, call us for a second opinion. I always tell investors, it can't hurt to talk. If you're unhappy with what you're doing today, maybe sitting down with us and looking at a different approach than what you're doing, a solid investment strategy, makes sense. So again, if you're a non-client, give us a call. It can't hurt to talk and discuss your options. Until Sunday's show, make sure you have yourself an extremely profitable week.